What's up traders, welcome to Failure to Displace. In this video I'm going to do a trade breakdown of this excellent entry bagging 5.2R on EURUSD this morning in the London session and explain why I took the short trade as opposed to taking a potential long entry after sweeping the Asia and New York PM session lows. Let's jump into the high time frame analysis now, see the logic behind this entry. So we're going to start the analysis off a little differently today. I started my analysis on the 1 hour time frame this morning. Something that's resonated with me in a recent video I watched with ICT was the fact that he mentioned draws on 1 hour liquidity levels. So what I was doing is I was aiming just to see where we were 1 hour swing highs and swing lows. What I'm noting is relative equal highs, the Asia high and yesterday's high. So Asia's pumped up, it's not been able to take yesterday's high, it's just fallen short. We've created relative equal highs here, so we do have a strong level of buy-side liquidity at this point. But the other thing that's standing out is this massive new day opening gap. So we can see price closed at 4, and then in the crossover to the new open at 5 in the afternoon, we had a massive drop down. So there's a huge gap here, a massive new day opening gap between the close of the 4 candle and the open of the 5 candle. We've not filled that yet. So this gave me a bearish bias. We've pumped up, we've failed to sweep out the high, but we do have this huge gap. If we see opening day gaps like this, they will generally get filled. So I did come into this expecting this to be closed through, marking this as a potential swing low. So an area of sell side liquidity. So currently inside this consolidation range. You can see yesterday we had a nice pump up. So the New York AM session had an explosive move. I'm going to pull a fib from the high to the low, and what I'm looking at is I'm looking at where the optimal trade entry is. So this is the 618 to the 66 is kind of the optimal trade entry area that I'm interested in, and also premium and discount. So obviously anything above 0.5, which is the 50% of that range, is in a premium, and anything below is in a discount. Again, following ICT's teachings, we want to be looking for sells in a premium and buys in a discount. So sell high, buy low. So consequently, this analysis here where we are in the price range and the fact that we've got this new day opening gap gives me again a bearish bias. I prefer to be looking for sells in this region as opposed to buys down here. We've left inefficiency, so we've got 1 hour fair value gaps here on this huge rise in the New York AM session. And we are respecting a 1 hour fair value gap, bearish fair value gap, which has repelled price twice at the moment. The other thing that I'm noting, I mean, this week has been horrible price action. We're consolidating inside this range from Friday. We had a massive pump up due to red folder news on Friday. We still haven't filled this inefficiency. So we've got a big 1 hour fair value gap. We've made a couple of attempts at getting down to fill this, but we still haven't done it yet. I would expect after big red folder news driving price like this move will eventually get retraced. So again, it gives me a slightly bearish bias. I mean, I've been expecting this retracement all week and we've just been grinding lower, so we've not actually completed it yet. Let's drop onto the 15-minute time frame now to go to our more typical analysis. We've highlighted our 1 hour swing points, so I'm just getting a more of a bird's eye view of what price action was like on the 1 hour. On the 15-minute, we're going to use our session liquidity tracker, which is showing us untapped levels of session liquidity. We've pretty much already highlighted those with our buy side and sell side. So obviously we've got untapped New York low below us. We have the Asia low, which is this big massive gap down, which we've already marked, and then the relative equal highs at the top. You can see that we have taken, sorry, this is the New York PM session low on this gap, and then the Asia low, we've just swept this 15-minute swing low. Again, we're sweeping this into a 15-minute fair value gap, which has been respected at the moment. So I'm coming into the session with a bearish bias. As the session was starting, I placed an alert at this low for sell side, looking for a sweep of this low and this high. So I didn't want to get sucked into any trades at this point inside this range. I wanted a sweep of liquidity to decide where I was going to go. So therefore I had alerts set here and I just left the charts. We'll scroll forward now and we can see that we do sweep the sell side. So we sweep the sell side at 3:15 coming into the silver bullet hour. As I came to the charts, I was looking at this on the 1 minute. Obviously, having swept sell side, there was the potential to look for a long at this point. For a long position, we've got, and this is the trade that I believe many people will have taken. We've got a high, we've got a lower high here, we've got a higher high at this point, and then we drop down. So we've broken structure at this point here. We've come back up again. So this is our new high now. New swing high at this point. We sweep the low, which is making this our valid order block. Now these two up closed candles are an order block. So these should be resistance. So we're expecting these to hold as resistance. Now if we're anticipating a reversal, we want strong displacement through this order block to show us strong buying. We've left a bearish fair value gap at this point. So as you'll see with our unicorn entries, we want to see opposing PD arrays failing. So this is currently a bearish fair value gap. We want to see that get closed through aggressively and then this get traded through aggressively. So this becomes an inversion fair value gap or potentially a balanced price range. And then this becomes a breaker block if we're looking for an entry to the high. We've had a very aggressive move down. So I'm very conscious now after yesterday looking where the displacement is. Where are the larger candles? The larger candles at the moment are all the bearish candles. So that's playing on my mind as I'm watching this. We have respect of that fair value gap. So we've closed at 50%, showing strength in this bearish fair value gap. We do eventually close through it, so this can become a inversion fair value gap. Notice the size of the candles, however. I would want it to see a aggressive move out of the range and then pin hammer engulfment engulfing this candle really. So a larger bullish candle for me to be interested in taking this long, expecting those relative equal highs from Asia to get taken out. We're not seeing that. We're seeing a small pullback into this order block. So I'm not convinced yet. Slightly larger candle, but again, this bearish candle is still more significant than these candles here. We have a pullback, so it's not a clean drive straight through the order block. We're finding resistance again, so this is just adding doubt now in my mind that this is going to be a trade. So I was monitoring for a long at this point. I won't lie, I was hoping to get a long position to take out those relative equal highs. Despite us being in a premium of yesterday's range, I just thought that those relative equal highs from Asia and the previous day were begging to be swept. Again, pausing inside the order block. So we've not got clean displacement through the order block. We eventually clear out. So this is now a breaker block. But this isn't the unicorn entry. So we don't have clean displacement out and through. We look at the top, however, what we did see. So this is what I noticed. We put in a high. Put in a low. This would be the low. We've swept that high. So we've taken liquidity. And then we have broken through this low with displacement. The last down closed candles that create a swing low before a new swing high are our breaker block. So we have 1, 2, 3 candles here that have created a swing low. We also have this candle here. So ICT says it's the one with the lowest close. So you could effectively say this one. I'm going to highlight all 3 of these, including the wicks, as my breaker block. And we are coming into that aggressively now. And what's leading me into this is following displacement. So I'm seeing where the market is tilting its hand, and displacement is showing that. So we've displaced through this breaker block area. We have obviously a fair value gap inside the breaker block at this point. So this is a unicorn entry here. You could have placed a trade at that point. I wasn't comfortable enough to do that. I was monitoring price action coming in. We're looking for the open of 15-minute candles. So we are at 337. So 345 is when I'd love to synchronize an entry. So I'm looking for a reaction now to see if this displacement is valid and this breaker block is going to hold with our unicorn entry. You can see we find resistance. We've tapped the fair value gap. We've closed exactly at 50% of that fair value gap. Put in a high, still respecting 50% of the fair value gap. So I'm getting interested here. Rejected away from the 50% level of that fair value gap. So this is looking like it's holding. We've pulled back. Coming back into the breaker block. Got a strong move now. You can't really see that because of this. So this is 15. This is this is the open of the 15-minute candle. So 345. So we're putting in this pullback pattern. Watching closely that high there. So this is our last swing high. This is our swing low. So we're in that range. So what we're wanting to see for our breaker block unicorn entry, pull into this, sweep that high, break through, retest, and go. So this is what I'm looking at. I'm looking for an additional confirmation. We've already had that pattern here, so that is a valid entry. But I'm looking for additional confirmation that this breaker is going to hold. And so I just want validation for my entry. We sweep the high. Notice how we're still respecting 50%. So yes, it's a slight close over 50% of that fair value gap, but only just. And we're rejecting away. So we've now swept that high. Displacement through. Larger than average candles. So we've got these smaller candles, and then all of a sudden we have this pin hammer, relatively large one, and then this engulfment candle here of this entire structure. We leave a fair value gap here just inside the breaker block. So we've got a bearish fair value gap inside. Should highlight, sorry, this is the breaker block that we were looking at now. We've created a new breaker block inside this existing breaker block, and we have left a fair value gap inside that. So we've got stacked breaker blocks, essentially, is what I was thinking. Fair value gap inside there as well. We've just come past the open of a new 15-minute candle, 348. We've closed through that breaker block, so I was going to take an entry from the bottom of this breaker block. I was going to use this high for my stop loss. I have a fair value gap inside there, I have an order block inside there, and I have the breaker block. So I've got 3 PD arrays supporting this short idea. I'm going to take 50% of the trade off at 1-to-1. Because we're coming back into this breaker block area. So I kind of want to get risk free as quickly as possible. This is a short trade that we're taking in a premium, and my plan is to run this down into a discount. What I have noted on the 15-minute time frame, sorry, which I forgot to highlight. Yeah, we have a balanced price range in this area. So we've got a very small bearish fair value gap. Let me zoom in on this. Candle 1, candle 2, candle 3. So you can see we've got a bearish fair value gap here. And then that was traded through with a bullish fair value gap here. So we've got a BPR on the 15-minute time frame. And that BPR is sitting, why I've got that line there. That BPR is sitting inside optimal trade entry. So I'm looking to take a short off there, and my plan is to run this into optimal trade entry. 50% of the trade will be taken off at 1-to-1, which is inside that breaker block above this fair value gap and above this inversion fair value gap, because we may come back, rebalance these, and then reverse. So I am aware of that. We've got relative equal highs above us, as we mentioned, from Asia and previous day's high. So we may reverse there. However, I am hoping to short in a premium and ride this down, selling and buying back again in a discount. So we don't get tagged in at 49. We get tagged in at 50. So this is 350. We're tagged into the trade. We're back into that fair value gap inside the breaker block. Nice reaction. Basically tagged this order block here inside. So if you're looking for areas of resistance, that's the resistance that we've tagged. And then price aggressively moves away from that order block, which is inside the breaker, inside the fair value gap, to take our first take profit very, very quickly. So essentially very little drawdown, and then 5 minutes later we are risk-free on that particular trade. The next idea was to take TP2 after sweeping this low. So this is the low of the session. Again, we may sweep liquidity and then reverse. So I mark sell side here, TP2 just over 2R. Horrendous price action, so pulling back, consolidating in this area, so it's not clean price action. And come back. So I was a bit worried at this point. Obviously, you'll know with my strategy, when I take 50% of the trade off at 1-to-1, I don't adjust the stop loss. So I don't go to break even after taking take profit 1. I've bagged 50% profit at 1-to-1, which means that the 50% profit will cancel out the 50% loss that I will take, because I've halved the trade size if we do get stopped out. So I'm risk-free at this point. I've not made any money, but I'm risk-free. If we get stopped out, it's just going to be a break-even trade. So my stop loss is still above this high. So this pullback is not great. It's into drawdown again. Back into that higher time frame, or that higher up fair value gap, respecting it. And then we do eventually come away. Again, look at the times. We're up there at 4:30, and then we get the aggressive move down. This is where I did get confident. We're essentially engineering liquidity here, so monitoring this. So I'm not panicking about closing out at this point, because we've created relative equal lows. So engineering liquidity above the sell side that I actually want to target. Get a pullback, and then we'll come back into the bottom of this breaker. Reject away. Just goes on and on. Eventually we'll take TP2, so that's TP2 done. At this point, set TP3 to close out at optimal trade entry, so at the 618, 5R trade, and I walk away and leave the trade at this point. I don't want to monitor it. Again, horrible price action, lots of consolidation and choppy. We just happen to be using the logic of taking shorts in premiums. It seems to be paying off at this point, and obviously the double confirmation that we had one breaker block and then another breaker block form inside that earlier breaker block. The price does eventually grind its way down into a discount, so we're into the 50% level. You can see the reaction as we get into a discount. We immediately get a reaction here. And then we eventually pop down to take the 5.1R trade. We've not quite tapped the balanced price range yet, so that is a potential target. I will just close out the top of optimal trade entry. 5R is more than enough for me for a morning's work. Let's see where we are as we go into live time. So we're just getting a pullback now prior to the New York session happening. So that was the short trade that I took on EURUSD this morning. I hope the analysis was useful on that. Did get a mention or a comment about pound, and I will say that I was looking for a pound long position this morning. which never played out. We had SMT divergence on the pound with the dollar. So the pound swept the sell side liquidity that I'd marked out, which was the Asia low. We swept that coming into the silver bullet hour. So that's what that line is there. And as we swept that, we created SMT with the dollar. So what SMT is, this was showing strength in the pound. These two pairs are inversely correlated, meaning when the dollar's going higher, the pound should be going lower. Because the pound made a higher low here, while the dollar made a higher high, this is showing strength in the pound. It should have dropped lower. The euro did drop lower, so it showed weakness in the euro, or the euro was basically acting as you would have expected. Euro made a lower low at this point, but the pound made a higher high. So I was looking at this for a potential breaker block entry. It never occurred. I was going to use this as an order block at this point, so my thought process for this for a long would have potentially been taking this order block. It's not the unicorn model, so this isn't part of the plan. I just wanted to address this because I did have a comment about why I didn't take a pound trade. I saw strength in the pound, so I wasn't looking for shorts on the pound because of SMT. I was considering taking a long if we'd have broken this, pulled back into this area, seen a decline in the dollar, potentially take the pound up to take out Asia high based on the standard Judas swing model. Essentially, price essentially put in this high. We never took out the low again. It just continued, rocketed straight up through the high without giving us an entry. It didn't take a short on the pound as we took the Asia high because I was already in the trade on the euro, and because I had seen SMT divergence on the pound showing strength in the pound. You want to trade the weaker of the two pairs. Euro was significantly weaker than the pound, so the euro was definitely the better choice if you're looking for shorts. The pound would have been the better choice if you were looking for longs because there was more upside given the bullish SMT that we saw there. So I hope that clarifies the observation on the pound as well. I hope you found it useful. If you have any questions, leave them down in the comments section below. If you enjoyed the video, then please give it a thumbs up. It'll really help me out. And also, if you're enjoying the content, then consider subscribing. It'd be great to have you on board. Thanks again for watching, and I'll see you again in the next video.